Ever wondered what people were talking about when they said that they are invested in a tax-free savings account, or if you're from the US, a Roth IRA? Well, to put it simply, this is a very powerful opportunity that you can use to invest and make significant returns without the burden of tax. So remember, when you earn your income from your 9 to 5, there's already tax at the end of the day, at the end of the month. When you get your pay slip, it's net of tax, right? How unfair is it that when you invest this money into the market and it grows, let's say you double your money, the difference between what you've put in and what you get out is what then will be taxed again. Through the use of a tax-free savings account, you avoid all of that. What's up everyone, I hope you're doing well. Welcome to my channel. My name is Tresnan. Let's not waste any more time and get straight into it. So, what are the rules with a tax-free savings account? Well, it's actually quite simple. So it's in two stages. Number one, you can only invest a maximum of 36,000 Rand per year, tax-free. Number two, you can only invest 500,000 Rand over your lifetime, tax-free. So where this becomes powerful, like I said earlier, is if that 36,000 Rand you invested in year 1 becomes 200,000 in year 5, you don't pay any tax on the difference. You get that 200,000 straight into your bank account, no tax whatsoever. Let's make another example. You take that 36,000 Rand and you place it immediately into the stock market and you bought shares in, let's say, Apple, and your 36,000 Rand becomes 200,000. What happens then? Well, the tax authority in South Africa, called SARS, will look at the difference between the 36,000 you've put in less the 200,000. That difference, you get a exclusion of 40,000 Rand in that year. So 40,000 less the difference. That difference then gets multiplied by the CGT tax rate, which then gets placed into your taxable income and gets taxed as part of your normal earnings. Okay, so now you've decided that you want to do a tax-free savings. What's the next step that you take? Well, I would suggest, if you want to start off with something really small, open an EasyEquities account. Once again, I'm not sponsored by them. Hey? It's just very simple to use. You'll see once you enter the EasyEquities app, there's a placeholder called a TFSA account, right? There you can invest from as little as 5 Rand. Now, what's commonly invested in are exchange traded funds or index funds, right? S&P 500 is one of them. You might have heard of this before. All it is, it takes the 500 top companies in the US and picture them being thrown into a basket, right? And then you take a blender and you mix all 500 of those companies up together and your end result's a smoothie. Every sip of that smoothie contains a portion of the 500 companies' shares. So the reason why this is safer than conventional stocks is because you're not subject to the movements of one stock. So if 10 out of those stocks experience significant growth, another 20 experience a significant decline, your risk is kind of averaged out. Yes, it's going down, but you are not exposed to the significant drop in the share value if you were only invested in one stock. So that's why the S&P 500 is a safe bet to go with. There are many other options, but as a start, that is where I would put my money. Bear in mind that if you had your money in a bank account, it will generate interest, but interest in South Africa is typically between 3 and 5%, whereas the S&P 500 has actually averaged 10 to 11% since inception. That's insane. Every 10 years, you are essentially doubling your money. Okay, so let's wrap this up, right? So tax-free savings, you agree with me, it's a very good investment vehicle to start with, right? The point of this video was not to highlight what it is that you should be investing in within your tax-free savings. It's only to highlight the benefits. Remember, you are limited to 36,000 Rand per year and a lifetime amount of 500,000 Rand. Whether that 500,000 Rand grows to 1 billion Rand, you still won't be taxed. This is an upliftment program that the government has issued because it makes sense. the more people start investing, the more money you generate. The more money you generate, the better the economy. Okay, so if you've made it to the end of the video, thank you so much for your support. I appreciate it. Please don't forget to like and subscribe. This will play around with the YouTube algorithm, which will help me out in the end, because I'm trying to reach the masses and instill financial literacy so that it's evident not just in accountants or someone in finance, but in everyone. Thanks everyone. I'll see you next time, hopefully with even more interesting content.